Welcome back to the channel. Today I'm gonna cover the UK inflation and why is the rate of inflation in the UK so high compared to the rest of the European countries. Basically, if you live in the UK, I'm sure you noticed that the prices of many goods and services have been rising rapidly in recent months. So, food, fuel, housing, healthcare, the cost of living really seems to be going up faster than the wages or savings. Um, in this video, I will examine then all the factors that contribute to inflation and what are the consequences for people and the economy. So, what is driving the inflationary trend? There are several factors, and we can see here in this article one of them. Of course, these factors are similar to other European countries, but we see if there are some differences in the UK. COVID-19 pandemic, so the outbreak of coronavirus in early 2020 and all the waves that we have witnessed have disrupted the global supply chain, so reduced the labor productivity, increased demand for certain goods such as medical equipment, food, and electronics. So these effects have led to shortages of raw materials, intermediate goods, and finished products, which in turn have pushed up prices. Moreover, the public health measures taken to contain the virus, such as lockdown, social distancing, travel restriction, have reduced the supply of services such as hospitality, tourism, and entertainment. So that led to higher prices for the remaining ones. Um, so, of course, we can see here that when the restrictions were lifted, then there's been an increase in demand, and of course, the goods weren't enough for that demand. Also, because before the production was, of course, reduced because the demand during the COVID pandemic, because the lockdowns was much lower. Now, the other inflationary factor is Brexit. Maybe let's see if that's the case. So, the UK departures from the European Union in 2020 has created an additional barrier to trade. So, they've been introduced custom checks, tariffs, regulations, and all of that increased the cost of importing and exporting goods and services, which definitely hasn't happened in the other European countries. So this has affected many industries from fishing, farming, manufacturing, finance, and reduced the pool of workers and consumers available to UK business. As a result, prices have gone up for some products that used to be cheaper or more abundant thanks to the EU membership. So there's, I think, different opinion on that. Some people say, okay, Brexit has actually had a smaller effect, because anyway, there's been still population growth during those years in the UK. I believe that probably Brexit had definitely an effect on inflation. Some of the people who during COVID also left the country, and it was then difficult to find workers in certain sectors, and of course higher prices had to be paid. Now, another factor that we need to cover here is energy prices. The global prices of oil, gas, and electricity have surged, of course, partly due to the recovery of demand from the pandemic lows. So what happened is during the pandemic, the demand really dropped. So then production did the same after a few months, a year, and then when everything, of course, reopened, the demand, then also all the supplies constraints started to emerge. So there's been a few other factors like the reduction of coal production in China, political tensions in the Middle East and Ukraine. We've seen the still unfortunately ongoing war in the Ukraine. So these price hikes have affected not only the cost of heating and transportation, but also the production cost of many goods that rely on energy, such as plastic, fertilizers, and chemicals. We see in here in this article that the rate of inflation is definitely dropping now, but it's still very stubborn, like at about 10%. They I don't think that we are going to see a reduction to 2% this year. Probably likely that, as they say here, we might even get to maybe 5%, but it's still not clear what's going to happen. So there's still, of course, good news here that we can see in this article. So of course, the all these effects depend on the sector and the region, but overall, I think that has affected the UK as a whole. So the UK government started then to take several measures to reduce inflation, which has been running at high levels in the last while. So the of course the inflation is caused by supply and demand imbalances, global domestic shocks, monetary and fiscal policies. So the government can definitely address some of these factors and create conditions for sustainable and inclusive growth. So let's see what the UK government can do. So the UK government has definitely tried with taxation and the spending powers to affect the aggregate demand in the economy and influence the level and composition of prices. So the government, of course, can reduce taxes on essential goods and services, such as energy bills or public transport. It can give you, of course, something back, reduce the taxes on the bills, and they can also increase, public investments and stimulate the economy, and that was happened during the pandemic. So they definitely stimulated the economy. They printed a lot of money, and all of that caused inflation. The government can also influence inflation, controlling the monetary policy. So we can see here that there's been some changes. The Bank of England started raising interest rates, which of course affect the cost and availability of credit for households and companies and the asset purchases. So basically, the UK, the Bank of England then also changed the policies of the quantitative easing, and we can see soon in another article here. So so this is the big change that happened. The Bank of England objective is also to maintain price stability, and with inflation that was running over 10% in 2022, definitely it failed miserably. They have a target of 2% in the medium term, and to achieve that, they started raising interest rates, and so that trying to cool down the economy. What happened is that before COVID, there's been a lot of process called QE, and the QE basically is that the Bank of England is basically buying bonds, buying assets, and it's an important player in the to keep the economy running and what we are seeing here that also that has completely changed the policy. The government also can also try to address the labor market inefficiencies, the infrastructural bottlenecks, and the regulatory barriers. We have seen that now in the UK they're trying to reverse some of the changes following Brexit. So they realize that there's definitely too much bureaucracy, too much cost, and of course investments are not really plentiful in this kind of environments. So the government can also try to invest in the transport or energy network, or give grants for renewable energy to production, for production of more energy that could reduce the increase the supply and reduce the demand. But these policies can definitely take a lot of time. There's definitely other aspects like the international so barriers in trade, trade imbalances, and we've seen a lot of that because of the Ukraine war, and so they can work on the new trade deals and reduce tariff, and that's, I think, what's happening at the moment with the EU. So the UK government is trying to do that, to undo a bit of the damage that Brexit caused. So of course there are these are some of the ways in which the government is trying to reduce inflation, but the effectiveness and trade-offs of these policies depends on various factors such as the state of the economy, the expectation of consumers and business, the external environment. So the government has to, of course, balance the short-term and long-term priorities. Now at the moment it seems like the issue is the inflation, but it could well be that next year is going to be a situation much better. But at the moment, a lot of families are struggling. Thanks for watching the video. If you like more of this content, please subscribe to the channel. Bye for now.